Next, I want to talk about gold and silver and some currencies. Now, as you may have heard, Switzerland on January 15th announced that they had decided to unpeg their currency, the franc, from the euro, which is a smart move. Now, you're hearing all kinds of things. Oh, it's a dumb move and this and that. Well, I think it's a dumb move for anybody to be in the euro that doesn't need to be. I mean, the euro is a disaster. I've been talking about this for quite some time. And so, you know, the Swiss franc was obviously being pulled down by the weakness of the euro, which continues to weaken. And this caused, once this happened, of course, this caused the franc to soar, and it caused some other things, right? It caused the euro to go down. Most importantly, though, I think that it provided a boost to gold and silver. Now, you'll recall from the January 2015 Intelligent Investor, Part 1, the commodity section, I showed in one of the charts that this 1200 support in gold had not yet broken down. It looked like it was breaking down, but it had not yet confirmed that. You should go back and review that. That's page 30 of the January Part 1 Intelligent Investor. So I mentioned that it had not broken down. So now if you read on page 30 from the January issue on gold, let me just go ahead and read. Currently, gold is testing the 1200 support. We feel it will break down from the support in coming weeks. However, when trading gold, it's important to keep in mind the largest catalyst that can move gold, parentheses previously discussed. So the point is that just because we talk about gold testing or breaking down from the 1200 support in coming weeks doesn't mean that's its next move, right? As we've discussed in the past, we can see rallies. And because I talked about the 1200 not having been violated or gold having broken down 1200 yet, should be no surprise as to this rally because, of course, gold had been rallying over the past couple of weeks anyway, right? Although it had come down to 1200, it had not confirmed a breakdown. Now, that doesn't mean it's going to go higher, right? But we look for the next move. If it bounces off that 1200, then that's a bullish move. Now, gold had been bouncing off that 1200. It was higher. And then, of course, recently now, over the past few days, we've seen how gold has rallied much higher and has broken past the 1260 resistance. Now, you'll also recall that I talked about in the December issue, December 2014, that gold could rally as high as 1260, right, if it did bounce off the 1200 support. Now, it didn't. It stopped short of that right around, 1240, maybe 1240 or so, and then it sold back off, right? Well, the key thing is this. That 1260 resistance was important. Why? Because it's an intermediate term resistance. And if you look now at one of the charts showing a short term, say a week or so gold, you'll see, first of all, that during that Swiss, I call it the Swiss effect on January 15th, and that's of course the unpegging of the franc from the euro. The Swiss effect, you'll see that gold struggled. It soared. First it soared from 1228, immediately soared all the way up to 1255 and stuttered between 1255 and around 1260, 1265 throughout the rest of that day. And it closed at around 1260. That shows you that that was a point of resistance. Now, because of this kind of unprecedented, unforeseen situation with the franc, I think it's fair to say that gold would continue its rally. And that's exactly what it did on Friday, January 16th. It finally broke past the 1260. So, what's the point? The point is that gold is breaking through that 1260, 1255 resistance. On one chart I show 1255, and on one chart I show 1260. And the important thing behind that is twofold. First of all, clearly gold is in a rally that began since the beginning of the year. And it began in the beginning of the year because the stock market sold off. So we had that market hedging effect in the beginning through, the first half of January, where the stock market largely sold off and gold largely rallied. Recently, though, as the market has shown some stability, the market weakness has subsided somewhat, at least for now. Gold is still going up. Why? Because of the Swiss effect. Okay? You can see that clearly on a chart of gold. So I wanted to throw that out there. So it's broken through that resistance, the 1260 resistance, right? What does that mean? Well, I want you to understand what the potential upside could be, because I don't think this is going to result in a reversal of the longer-term trend. I think there could be more upside to gold, but I think it does have a limit. And so the point is that for those of you who are trading the GLD, you should be watching this and look for some weakness, because once this thing does sell off, I think it's going to come back down to the 1200 mark, maybe even lower. So how high could this rally go? Well, it depends on a lot of things, obviously, right? Depends upon the market strength or weakness, and of course that's going to rely on earnings, as I've discussed previously. And there could be some other things out there as well. Statements from the ECB, thoughts relative to the extent and means by which the EU and ECB does execute their quantitative easing, things of that nature, right? But all that aside, just generically speaking, if you look at the charts, we can see an upside in this rally to gold of maybe 1350, okay? Maybe a little higher, but I think 1350 is a pretty ambitious upside for this rally. I think, probably a more reasonable rally would be around 1310 or 20. Point is not to nail this exactly. The point is that you're looking around that range to see if and when gold weakens, and then to either sell your GLD and or short it, if that's what you've been doing. So that's pretty much all I wanted to say. And silver is a similar situation, but of course the more visible effect of all this, the Swiss effect, it's better seen in gold relative to silver, but overall you're seeing a similar trend, right? And of course we've got the strength of the dollar, right? Continuing to go higher and higher. So the dollar, of course, that is more important to understand relative to I mentioned that the more likely top in the current gold rally would be 1300, 1310, or 1320. So 1300 to 1320. And of course, as always, you should look at the comparable price in silver during that time, right? So what happened? Well, gold actually did rally all the way up to about 1300 or 1310. I can't recall which one. And then it started to weaken. Remember I mentioned you want to look for that area, 1300 to 1320, not to run your trade all the way up to that, right? Because remember, we're still in a bearish trend. This is a, gold's in a short-term and intermediate-term bullish trend, but long-term is bearish. Longer term is bearish. So you want to be careful. You always want to kind of, especially with gold and silver, very volatile. Even though those short-term and intermediate-term are bullish, I would personally trade that with a bearish bias. So in other words, you don't want to try and eke out all the upside. So what I said you should do is you should look for weakness during that 1300, 1320 region. Once you saw that weakness, then that would be a good indicator that gold would be selling back down towards that 1200 level. Okay? And so far, that's exactly what we've seen, right? I mean, this is, for this to pan out like this, once again, I think a lot of you are spoiled because I'm giving several scenarios based upon what I think is going to happen, but many things can happen to change all that in between, right? And the reason why I wanted to make this audio and talk about gold in the beginning and before I got into oil is that I wanted to point out that we're seeing some little caveats now, right? In other words, this is not selling off, gold is not selling off, silver is not selling off down to where we think right now. It should be lower, but it's not. Why? Because the market weakened, right? So that sell-off in gold and silver was kind of interrupted, or is currently kind of in the interruption process as of Friday, right? As of Friday, January 30th. Why? Well, because the market sold off. We got some, I wouldn't say weak GDP data, but, non-impressive GDP data. And, the global economy continues to weaken, right? So, of course, you have the situation in Europe. So as a result of that, gold made a nice rally, right? It doesn't mean that the sell-off is over. So here's what I think is going to happen. Based upon what's going on now, there's a lot of uncertainty out there. And, of course, also earnings, right? Remember, earnings also impacted gold because it also impacted the stock market. So here's what I think is going to happen. I think that gold is still going to continue in its downtrend, but it's going to be more of a shorter-term bearish seesaw movement, right? So I think what that means is that there's probably going to be some pretty good day trading opportunities for gold in coming days or weeks. But overall, I do feel that gold is still going to head down towards the 1200 support. I don't know how close to that support it's going to get, but it's going to head down towards that support.
Thank you for coming home. Sorry that the chairs are all warm. I left them here, I could have sworn. These are my salad days, slowly being eaten away. Just another play for today. Oh, but I'm